Welcome to the One Harvest Podcast. We got Aaron back in the studio with us today.
Welcome back, Aaron.
Thank you.
Ian also as well, and myself, David Azevedo, as the host, and Deon Jones, a cannabis lender in the building. Thank you so much for being here today, Deon.
Yes, sir.
Hey. So with lending money for cannabis owners, cultivators, dispensaries, real estate, commercial, all that stuff. So how does that work? Can you explain exactly what you do?
The main purpose of my whole goal here is to just make sure that I'm a resource for people to get money, be a hub of information for people, so that way we can navigate the best way for you to be able to get some money.
Rules and regulations against cannabis companies that make them not lendable. How do we make it lendable?
There's a few different ways of looking at how to go about getting some money for cannabis. I mean, unfortunately, we have a government that is federally saying that it's not legal, right, to pursue these monies and to hold these monies, and they're holding the banks accountable for that.
Yep.
But at the same time, you can pay your tax dollars over there to them, though.
Right.
Yeah. They
Right.
want to eat. Yeah.
There's so
but
many
they're not
of
feeding
us.
us.
Right, correct.
Yep.
There's so many of us that are doing the right thing. There's not a lot of black market stuff. There's a lot of us that are out there. We're paying taxes. We're filing tax returns, both federally and state.
Yep.
And we're paying these absorbent taxes on both ends, not including the sales taxes or
All the
different
additional taxes
correct,
that they
are
like
being
to
paid.
add.
But then when you go to put your money in the bank is telling you that they can't really hold your money, right? Or it's difficult. Or they can take your money today, but then tomorrow they can't, so they close your account and you got to go find another one.
Yep.
Are these some of the experiences that you guys have been
Oh
having?
my God, yeah. I have so many friends that grow traditional weed, and by traditional, below board farms, and they just wish that they could pay taxes. They really want to pay taxes, either because they want to start families, they want to buy homes, they want to buy cars. And these are really hard things to obtain when the government can't actually keep track of your money. And so I think it's a huge obstacle. It is unfortunate for these farmers. They're not allowed to be involved in the federal banking system because they just want to be functioning people just like everybody else that's operating in the commerce spaces in America.
Do you do a lot of work with credit unions? I've noticed they are welcoming more cannabis companies to work with them.
You know, I think that I think it all starts on where you're at currently. There's so many different ways to obtain money, but it just depends on exactly where you are currently in the system and how you're operating.
It's also probably how you're wording, like your business name, your DBA. Everybody's got a DBA, but do you have your business
Your
name,
legal
your
business
actual
name.
legal business name? Does that have any influence? Because
Sometimes. I would give you an example of, I would say this. I do a ton of transactions for people in the cannabis industry. It just depends on where you currently are. Let's say that you're a W-2 employee and you're at a cannabis industry. And let's say you get a W-2, you get pay stubs, you're paying taxes. I don't have a problem with doing that loan regular.
All day.
What do you mean by regular?
That's a regular 30-year fixed mortgage. Fannie Mae, Freddie
So you do
Mac,
trust
30-year
people that
fixed.
are operating legally in the cannabis space to give loans to, or is it quote unquote riskier?
No. If you have a W-2 and pay stubs and you're currently employed by a cannabis company, I would say that a majority of the time, like you were mentioning, if it's your dispensary's name is Johnny's Dispensary, let's say, but that's not necessarily how your tax returns look. Your W-2 comes how?
to a different
Your pay
legal
stub
name.
comes how?
Yeah.
So I'm going to take that and I'm going to treat that as a regular loan.
That's a regular business.
I'm sorry. I'm going to go 30-year fixed, Fannie Mae, Freddie Mac. You're paying taxes. You got W-2s, pay stubs. That's a loan.
There it is.
So if you're W-2 and you make enough money on paper, you're no different than a person anywhere.
Yeah.
You're no different. You're W-2 getting a pay stub just like anyone else in any other profession.
And if you're a startup cannabis company and they come to you and they're asking for a loan, is that kind of viewed in a similar way, or is it more how is it? What does that look like for people? Like, because access to capital is the easiest way to, and correct me if I'm wrong, access to capital is the easiest way to be successful.
I would say so. Yeah, depending on how you're using, if that's being used for business purpose.
And you are technically the capital that people are trying to access. They're trying to get loans from you. Do you guys look at cannabis businesses as a riskier loan as a startup?
I'm not really interested in the risk. I'm just interested in what do you qualify for right now. The people come to me because, actually, I had someone ask me that. They go, why would somebody come directly to you, Deon? And I told them it's so that way it won't be so painful.
Yeah.
Like, I'm going to tell you where you're going to get money and where
It's
you're
a
A lot of
relationship.
questions.
I mean,
I just don't want you to have so much pain. How many of you have gone out and gotten declined at 10 places in a row?
Oh, dude. Yeah.
How many of you have had
It's
your
tough.
How
Yeah,
many of
it's
you have had your
tough.
credit run 15 times?
Oh, God.
And you put your application in and you're like, oh God, hopefully I'm gonna go get it. And then nope, can't do it. So that's why people come to me, because I'm gonna save them that pain. I'm gonna let you know that they're not gonna do it right away.
yeah.
I'm gonna let you know that
It's
today.
gonna happen.
As soon as I see, no, I'm serious. I'm gonna look at your application today and I'm gonna say nobody's gonna do that. There's only one person that's gonna do that. Or these 2-3 people can do that. Or if you can do it, this is the only way that you're gonna be able to do that.
So you can cut it.
I'm
give
going
it
to cut
them
all the
straight,
pain
yeah.
out for you, and I'm going to let you know. And like I said, it all depends on where you're at in your business, on how we're going to be able to obtain you money. For instance, somebody like I just spoke about, that's W-2. That person, I'm going to be able to get money in a certain way. Let's say you're a dispensary owner, and you've been in business, and you're filing tax returns, and you have K-1s, and your income looks good, okay? There are a couple of different credit unions and banks that will do those loans, but they're doing them based on the real estate that you have.
Okay.
Does that make sense?
Yeah.
The
So
assets.
if you have,
So they're leveraging the real estate?
correct. So if
Okay.
you have a building and you own the building that you have a dispensary in, they'll lend on that building using that
The building.
cannabis income.
Yep.
Okay.
Wow.
They'll use that cannabis income to qualify for that building. Okay. There's a couple different specialized places that I know of, and I've closed many there, but they will do that. They also have,
It's a trip.
let's say you don't own a dispensary, but you own a building, but one of your tenants is a cannabis.
Or somebody wants to come in with a
Yep.
new cannabis.
Yes. Or you have a building and you want a new cannabis tenant. Okay. There's certain banks that'll do those type of loans based on that lease. Whatever that lease
The
and that amount is,
structure.
the structure of that lease, they're going to use that as income. You can qualify for financing on that building there. And that's industrial or commercial or
Yep.
retail
Yep.
in those directions. That's for people who have tax returns. You
That have
know,
all that on paper.
you got it on paper.
trail.
You can show. You got the income, the cash flows coming in. You got the lease agreements,
The credit.
the credit. That's one group of people, right? Then we have a group of people that don't have that. So how are we going to get them some money? I get money for people in that regard too. You have different categories of people, like I was explaining to you. It depends on where you currently are, on how we're going to be able to get you some money. Let's say you have a farmer. He's got a farm and he owns the farm. He wants to own the land. We do have private money investors that will look at those loans. If you have someone that has distribution or a warehouse or something like that, we do have private money lenders that look at that. If you're rural, I would say, let's say if you're out there, way out, you're probably not going to get more than 50% financing, I would say. So the more further out it is, I would say that's more risky for a private money investor. A private money investor is somebody that's lending their own money.
Is that just based off access to that person, like being able to reach them, or is that
I
like
think
calling them or emailing them?
It has to do with the asset in itself. They want to have less risk because it's further out. If that person doesn't pay or if they have to take that property back, they want to have a really nice cushion in there where they can make sure that they get their money back.
Yeah. Protecting themselves.
Okay.
Yeah.
That would protect the investor. So with private money financing, it's a group of investors. They like these deals. I'll package up the deal and I'll say, hey, look, I have this deal out here. It's $1 million deal. They got 500,000 into it. We need to get them 500,000. We can do those transactions for people.
Okay.
Rural transactions, land, industrial, commercial.
infrastructure?
Yes. If it's more urban, there's more, and it's an industrial area, we can probably get up to 65%
Wow.
of that financing.
What about rates?
Rates for cannabis people aren't great.
Yeah.
Let's just be honest.
Why
I
is
mean,
that?
they're
For
not.
real.
Why is that?
Because they're just not. It's like you would say, I guess, risk.
Yeah.
And if you're going to lend in that arena and there's a bigger risk, you just want more reward for the risk that
Yeah,
you're taking.
that makes
I
sense.
do think that if you're coming into the space as a quote unquote a fresh startup, there's a lot of mass consolidation happening in the market, and a lot of people are solidifying their positions as well. And it's really hard to overtake that as a younger cannabis company trying to make it in the market, I think. It's very hard.
Yeah.
It's basically like within cannabis, I look at it as a micro. It's just like you have these like big corporations, right? Like Kirkland is example is a company that is a big corporation. They have captured a market share that is really hard to take away from. And I think it's very similar with all these consolidated companies in the space right now. And they do all have a very strong presence in the market. And I do think that when you're coming into the market as a smaller company, it's gnarly, bro. It's crazy. You pretty much have to have been involved and moving in the space, at least in my opinion, the whole time since 2017 or before. So that you can have those relationships that people trust you, people know you're reliable. We were talking about earlier about doing what you say you're going to do. You have to already have that in place if you're going to start a new company and actually flourish and grow and scale. And if you don't have that, it's going to be very hard for you.
But I also think that you need someone to help you plan.
Yeah.
It's very important. Like, people come to me all the time, and we have to start that. We have to have that plan. How are we going to get started? For instance, I have people
got to plant the seed.
For instance, well, no, but we have to have that financial plan. Let's say you come to me and you don't have tax returns yet. You don't have credit yet. You don't have anything like that.
Foundation.
Okay? We're ground zero. But we take people like that. You take a person like that, they get private money. They do well with the private money. They show that. Then all of a sudden, they make enough revenue and they get good enough to pay that private money loan off, or they make enough income to be able to go file tax returns now. Okay. And now the equity in the property is higher or whatever it may be. And now you have room to go and you're able to file tax returns now. And now you're able to pay that off and go get that bank money that you were looking for. You see what I mean? So I think you have to set people up and you have to start somewhere to get them going.
Create a path, especially for people that are blank slate. Like,
I think
set
that
them up with a path.
You could always create a business. Even if you're a farmer that's coming in, create a business, create an LLC. This is what I'm doing.
A lot of farmers, they don't really know how to create a business. You know what I mean? All they know how to do is farm.
That's my point.
Having someone like you,
that's my point. Come to me, and let's get started. Let's make you a citizen.
Or a seed to shelf.
Do you know what I mean?
Yeah.
I know it's like you're out there running around with $500,000 in cash on the land.
On the land.
For real.
You know what I mean? You can't even come in town and buy a car if you want.
No, you can't.
You know what I mean? Let's fix that.
There's a formula to fix it. You might
do you get what I'm saying?
Yeah.
Let's become a citizen
this is
here.
when you call me.
Yeah, let's become a citizen here. You don't have to keep stash and do all these things we've been doing. Let's start something where you can start getting something on paper and start getting yourself into a position where you can come and get some bank money.
Show that trail.
Yeah,
definitely. That's what they want. They want documentation. They want to see that you're actually responsible to pay your bills. And if you want to borrow money, that's what it takes.
Yeah.
Exactly. So it just, like I was saying in the beginning, it all depends on where you're at and where you're at in your business or where you're operating at now. And let's come together and let's figure out to get you a way where you're operating in the best way. I got to be honest with you, all the top cannabis companies, that's what they're doing.
Yeah. Glass House, look how big they are.
Huge.
And they got, I'm sure, a great paper trail and a bunch of documentation.
But they all started at the same spot, though.
For sure. Cash.
They all started that way.
Cash.
That's what it is. It's
cash. Still cash.
Yeah, it still is. But you know what? They can. But now it's scalable. We can scale it now, though.
Yeah.
And right now, if you can't scale it, how can you have a business?
Are you finding a lot of bigger players in the industry looking for loans to scale or to, because it's all about market share, right? It's all about capturing. It's all about overtaking market share that other companies have. And to do that, you need to scale. So they do have an advantage because they do have proof that they have capital coming in. But do you find a lot of these companies are actually,
Yes.
Yeah?
Oh, yeah. Yeah. But it depends. It's hard to scale real estate. Not really, but if you only have so many pieces of real estate, right?
Yeah.
How do you get more capital for your business if you're not taking the money out on real estate?
So the banks know that they can actually leverage the real estate easier than anything else.
Correct.
Okay.
It's an asset.
Any other assets that would be a safer bet for you guys to leverage?
No.
No. Okay.
But which takes me to my
Like
next
machinery that they've already paid off, maybe. I don't know.
I'll take you to my next form of
That's a good
financing,
one,
though. I got to be honest. And then, there is unsecured cannabis financing.
Getting risky now.
You need money,
Yep.
and it's information only. Right? It's information, and it's having a source of money if you need it. For instance, so there's cannabis loans where you can give this company 6 months worth of business bank statements, show some operating costs, and if they like that, they'll lend to you, and they'll lend it based on your business.
On a preliminary status.
On a statement.
Unsecured.
Statement loan.
Yeah.
Yeah.
Yeah. So business loan, the unsecured business loans. There's unsecured cannabis business loans.
What's the rate on that?
Usually,
Not good.
I'm just thinking like, damn.
they're pretty high.
Yeah,
I would
I
say
bet.
they're not usually based on interest rate. They're based on factor.
What's factor?
So factor means like they'll have like between a 1.2 and a 1.6 factor payback, which means like I'll give you an example. If it's a 1.2 factor, let's say if you borrowed $100,000, right? On a 1.2 factor, you'd pay back 120.
Okay.
That ain't
Okay.
bad.
All the way up to a 1.6 factor
Ooh.
on a high risk, which you borrow 100, you owe 60, right?
Yeah.
So depending on your situation and depending on what you got going, I would say a 1.2 factor is not that bad. I would say a 1.6, I probably would say no.
Yeah.
But my point is that the money is there if you need it. For me, it's about what can I get you? Does this work for you? If it does, let's get it done. If not, I completely understand.
And you can probably look at people and like what they bring to the table and be like, this is not going to fly. Or
Well, that's
this
the point.
is my recommendation.
Well, this is the
and
point,
then
right.
You
Yeah.
can
Well,
break
that's
it
what it
down
is.
and get them their path.
There it is. That's it.
I
It's
love
that
it.
simple. You come to me, we take a look at what you're doing, and then we give you that path to get you there. At the highest level, you're operating at one of these credit unions. I would say those rates are probably between 10 and 12%, right in there.
Sounds about
Yeah,
right.
about right. Yeah. For those, your private money loans on land are probably between 12 and 13%, I would say, interest only. The good thing is that they do longer terms. They'll go up to 5 years on a term for you.
Okay.
On the private money loans, they won't usually do like they used to do 1 year and then you had to
Oof.
pay it off
Oof,
every
1
year,
year,
or 2
gnarly.
years or something like that.
Yikes.
You know what I mean?
Hey, that's when weed was selling high.
That's right.
That's
So
not
they won't-
today's
That was
market.
Exactly.
easy to make that
Yeah,
return.
exactly. But now it's so we'll go up to 5-year terms.
5 years seems cool.
5-year
Yeah.
terms
Cozy.
now.
It's
A lot of
cozy
the
at 5'10" right now. Yeah.
yeah.
It's
So it's not cheap money. No, it's not cheap money, but there's money.
yeah.
It's still
It's money, yeah. And when you're operating a business, as when you need money,
Yeah.
Can we talk about receivership at all? Is there anything that you can share about receivership?
as far as what we mean.
I'm not going to say who it was, but I made a call and I found out that this company that I was trying to work with was in receivership. I looked into it very briefly, but basically it's, to me, and I would love anybody out there who actually knows, maybe in the comments of this video, share what your definition of receivership, but it seemed like it was pseudo bankruptcy. Like maybe there were some bad loans that were given and these people that gave out the loans were trying to get the loans back, realizing that the company wasn't actually going to pay the loan back. It was something that I learned recently, and I didn't even know about receivership until I had this conversation with somebody. I do know that there were some companies like back in 2021, I won't say with the names, but they were also in receivership and they're no longer moving in the space. But this company was currently in receivership. So
No, I don't necessarily know what you
Okay.
mean by that. Maybe you might be talking about like a company that defaults on the business loan.
maybe that's maybe I don't remember them saying the word default, but they definitely said things were not
Yeah.
looking good on their end.
Yeah, when you're done.
Right.
Yeah.
But I think
and-
I think these people, and I don't know if it was private or if it was corporate money that was lent, but these people were taking action to try and get their loans back. Maybe going through the Fed. I have no idea.
Right.
legal action.
But I would love if anybody knows
Yeah.
in the comments, please explain what receivership is, educate me, educate everybody else. Because I'd never heard that before. And I was like, oh, fuck. And then did some digging and it was still a bit mysterious to me.
Got my laptop.
Got my laptop.
Shit. Yeah.
Yeah.
Check
Yeah,
that out.
Google receivership because it was I'll say a company that everyone here knows.
Ooh, damn.
I think I know.
Do you
think
know?
I know too.
I think I know.
Okay.
I'm going not to say anything.
But we're not going to say anything. But this is a
No.
very normal thing to happen. People borrow too much money. It
Well, in a
doesn't
normal-
work out.
For
you
a
know?
normal business, you would just claim bankruptcy.
Correct.
but you can't in the cannabis space because it's not fed.
And it's probably a hard money loan, correct?
Or
So-
unsecured.
Yeah. So how would that take place?
If it's a private money loan that's against real estate, it's just a foreclosure.
Mm-hmm.
So the lender would take action, go file
Get the
a
real estate.
oh yeah, they would go in and move to foreclose on the real estate. And that's when I say those loan to value ratios, as I was talking about. If
So-
you have a piece of land that's really far out, they're only
Mm-hmm.
going to usually give you 50% of that purchase
So
price.
do you guys own the real estate? If the deal doesn't work out, you guys have access to the real estate?
Correct.
And then you can do whatever you want with that real estate?
Oh yeah, they're going to sell it to get the money back.
Got it. Okay.
Definitely, yeah. That's what protects the investor.
So your institution takes custody of the real estate, the property, and then you guys do whatever you can to recoup your losses
Yeah.
in the loan? Okay.
for that particular investor. It's like a fund.
Mm-hmm.
Honestly, it's a fund of investors that pool their money together. They give us the discretion
Uh-huh.
on where to lend that money.
Okay. Is there any influence that the current housing market is having on, since we're talking about your group obtaining the properties which actually have safe, stable value to them, is there anything that the current housing market influence is going to have on that?
Always,
Yeah.
yeah. Definitely, depending on where it's at, it's going to have comparables.
Do you
Sure.
always have to be aware of like where the housing market is?
Yes.
Okay.
You do.
Is there anything that you can share about that?
You just have to have a really strong sense of value
Mm-hmm.
before you do a transaction.
Mm-hmm.
And how you do that is you do it by comparables. You get an appraisal.
How long does it take to close one of these loans?
Pretty quick, man.
Really?
Oh, man.
So
Private
you,
money loans
so you
close
write
quick.
up a report, you field an appointment, you write up a report, you determine how viable the loan is, and then they just give them away.
Yeah, man.
Really?
Sounds
Yeah.
so crazy.
Private money's quick, man.
Really?
Yeah, I close private money deals really fast, especially if it's a strong deal.
Hours?
I'd probably say a couple weeks, maybe.
Okay, that's okay. For me personally, it's 6 months
I know.
to
That's
close a deal.
that's probably what you're going to get at the conventional at the banks,
Yeah.
but that's when you're trying to get that best money. So you sit up there and you deal with it,
Mm.
and you put up with it because you want that good money. But this private money, yeah,
This private money.
yeah, we're gonna get that. Yeah, this private money, it's
Soon as possible.
yeah.
Hell yeah.
We like to close those.
Super interesting.
Yeah. Once we find an investor, it just depends on the deal. The thing about private money is based on the deal itself.
Mm.
It's hard to generalize private money.
Mm-hmm.
You know how like when you go to a bank, if you fit that criteria, they'll lend to you.
Mm-hmm.
Yeah.
Okay. If it fits, if it's this FICO, if it's this much down, if it's this, they have to do
Yeah,
it
there's a
because of those.
formula. Yeah.
Private money is people's own private money.
So, would you say there's more emotion involved?
Oh, yeah, definitely.
More
It's a
emotion
personal
involved? Yeah.
decision.
Oh,
I
yeah.
mean,
Oh yeah. I mean,
It's
you
not
got-
just numbers and formulas like
No.
that make it a safe
It might be a
thing.
nostalgic thing.
Yeah.
You might have an investor who grew up
Interesting.
over there.
Totally.
Oh man, I grew up on that road. Oh, I love it over there. Yeah, I'll do that.
That
deal,
happens
Deon.
all the time. All the time.
that's so crazy.
I love that. I love that there's an
Yeah.
emotional
That
to
can
it.
be good and it
you
can
know?
be bad.
Well, can you name why it would be bad?
You get an emotional guy.
Yeah.
When you draw the loan documents up and he calls and he goes, well, I don't like that deal anymore, Deon. I thought about it overnight and oh man, I talked to my wife and I talked to my dog and now I don't want to do it anymore. And you're like, what? So it can go the opposite way on you too. Mhm.
How
So
do
you,
How do you go about that?
it's just part of the deal.
Yeah.
Yeah.
Receivership.
Yeah.
What you do is you do the best that you can to gain the relationships, the best relationships you can with these investors.
Mm-hmm.
They trust you. They know that it's a pretty good deal.
Mm-hmm.
You give them all the information. So I'm not saying that all the time, but I'm just saying it's like that. Sometimes guys will do it because it's nostalgic, and sometimes guys will pull out.
Mm-hmm.
Wait a minute. Oh, I thought about it last night. I can't do that deal.
Mm-hmm.
Yeah.
And these are all digital conversations, or are there people actually going in a room and pitching and stuff like that? Or
What you usually do is you write up a deal.
uh-huh.
I'll write up a deal. I have a nice write up, and I'll say, this is what we're looking to do. This is how much money we need to get. This is the loan to value ratio. This is how they're going to exit the deal.
Mm-hmm.
Usually it's
Exit strategy.
correct.
Yeah. That's probably
Very important.
There is no lending unless you have it. So, number one, you have to have the ability to repay.
Which is the property, right?
You
Is
have you have to have the ability to repay. You got to be making some money
Mm-hmm.
in order to make these payments.
Mm-hmm.
And two, you have to have a clear exit strategy. If you have those two things, then we have a deal. But if any of those twos is murky, then it's
And it's easy. To
Oh, you
fish
can
those
spot
out.
it.
Yeah.
over time who pays and who doesn't.
Yeah.
You can usually tell. But those are the two most clearest things that you're going to be looking at. And the cool part is most of the time I'm taking them out of it anyway. So I know what that exit strategy is going to be.
Okay.
What you got for us, Aaron?
Okay, just Google. It says a receiver or a trustee steps in to manage an entire company, its assets, and all financial and operating decisions during this time. It is thought of as like a protective umbrella. So if your company is having a really difficult time, somebody comes in and helps you manage all of your assets and the company as a whole.
Okay.
So it's not.
So
It's not.
it's not foreclosure. It
bankruptcy.
says here the main goals of a receivership are to repay debts to creditors, negotiate with creditors to secure lower interest rates, maximize profits, enforce compliance with government standards and regulations. So that I feel could be
I think that's more in line with
more in line
the
with
conversation that I
our
was having.
conversations with cannabis.
They were literally like, call back in 2 months and let's see where we're at.
There's so much happening
Huh? Yeah.
with like just cannabis and
Yeah.
Another company. I ain't saying shit.
think
What it
there's
means that
people-
you're in a basically that's what a
it's like
bankruptcy is.
pre-bankruptcy.
Yeah.
It's what it is. You're
And-
liquidating.
So they're trying to get back as much of the loan as
it's
possible.
basically it's a restructure.
Yeah.
Yeah, a total somebody else comes in.
It's a
whoever-
restructure. You
and-
give up control of everything,
Uh-huh.
and someone else comes in and restructures all the debt.
Yep.
Very similar to a bankruptcy,
Yeah.
like a Chapter 13.
Just worded differently.
Mm-hmm.
They have
Yeah.
them
Just how
in
you get by
Google does
everything.
like
Yeah.
that verse liquidation or that verse bankruptcy.
Right.
I think it's like the precursor before
So
you
it's
get
not
shit
looking
really
good.
hits the fan when shit doesn't
That's a
look
wrap.
good. They
Yeah.
come in and they're like, let's
I hope not.
see if we can gain control and get you back on your feet. I think that's more of
Receivership.
I wonder if we're
receivership.
talking about the same people.
We definitely are.
You
I think there's more
Yeah.
people in receiverships than you would think.
Yeah, it's got to be
'Cause
pretty
it's-
common.
I think I've dealt with them. So
Yeah.
Maybe.
Let's chat after
Yeah.
this.
Off
Offline.
mic. I'll tell you what, though. For example, another cannabis company here that was very big, that is still very big, they got bought out by Cresco.
they're buying everybody.
Yeah. And I'm sure they are leveraging their real estate or what they have to bring to the table. And they're just now using bank money or
I also believe
investment money. They're not using their profits that they're bringing in.
If Cresco's buying them out, that's coming. I think it's coming from elsewhere, anyways.
Yeah.
Is Cresco Canadian?
Yeah.
Yeah.
That's
Their main-
investors' money.
Yeah, it's
Yeah.
investor. So it's coming from.
But it's so
the money's not.
it's just interesting to me because as in the cannabis industry, you can't deal with the bank, but you
I
can.
think Cresco's Canadian.
It depends on what bank you're with.
Yeah.
There are certain banks that will. There are certain banks you just got to navigate, man.
And these investors are the banks.
Exactly.
They're just structured differently.
I think it might, to be honest with you.
Like it's crazy. Like, and another thing, what if you went and got money for somebody, right? And that all went south, like what we're speaking about, but the person had that real estate structured in a different corporation and then it was locked in a trust. Is that maybe information that you look up prior?
Oh, yeah.
You know what I mean?
But yeah, none
'Cause-
of that matters. Once you
Yeah.
put a lien on a property,
Yeah.
the lien takes first. That lien
Mm-hmm.
takes first precedent. So if a private money investor comes in and he is going on the first on that lien and he has title insurance and it gets recorded,
Done.
nothing's
Yeah.
he's gonna get that back first.
Shit.
Yeah, before
good.
anybody gets anything else back, he's gonna get that first. That's what protects the private money lenders.
Yeah. It's just there's so many loopholes. I know these billionaires out there that are investing in real estate or other companies that they'll buy and they'll just liquidate them and suck them dry and then let them go. Bankruptcy. And
Yep.
it is what it is.
It is what it is.
And
Yep.
they keep it pushing.
But as long as you have that real estate asset, you're in. If you're buying business, that's unsecured. You know what I mean? So those are
Yeah.
the most expensive loans. That's the 1.6 factor loan.
Yeah. Damn.
That's a trip.
Yeah.
To
You know
like
what I
wrap
mean?
your head
Yeah.
around all that.
That's the 1.6 factor loan right there, man.
Yep.
With no security.
Yep. Yep.
So risk versus reward, man.
Yeah, definitely.
But if you need the money,
It's out there.
we can get it though. Yeah, and that's the key because everybody complains they can't get no money. But there is money out there.
Yeah.
And if we can make it work, we'll definitely will make it work for you. There's always usually something. Yeah,
What's the approval rating?
man. Pretty
You'd have
high.
to- yeah.
Pretty high?
I would say pretty high.
More than 50-50?
Oh, yeah.
Okay. 70? 30?
You want a number so bad.
I'd probably say 50-50, I would say.
Uh-huh.
Minimum.
Mm-hmm.
It all depends on
Where
what you
you're
got,
at,
where you're at. Yeah. Where are you?
Yeah.
Are you in the field out there? Are you filing tax returns?
Mm-hmm.
Are you W-2? Like, where are you?
Mm-hmm.
Paperwork look like.
Yeah. But if you're W-2 tax return, like I said, that first example I gave,
Oh, you're already in.
that's a loan.
Yeah.
Mm-hmm.
Yeah, that's
You're
a
an
loan, man.
employee.
Yeah, you're in. You're an employee, man.
You're
Yep.
getting paid and paying taxes. We'll take you.
Yep.
Yeah.
Come on down. Let's come get some
Come
money.
on down.
Come get some money. You know?
Come get some
Come
money.
get some of this money.
Just waiting.
So what if, let's say, I want to franchise out and invest into like cookie stores
Mhm.
in Sonoma
And
County
become a partner.
and be a partner, but I need funding for that. Could I bring them in to show that this is the revenue they bring in other places? Is there ways to get my foot in the door for that?
That's interesting. It depends on which way you want to do it.
Mm.
How are you buying in? Are you buying just into the business? Are you going to get like a property? Are you going to open up a
Like
branch? Or are you
It'd be
going
like a store.
Yeah,
you know?
that's what I'm saying. Okay, yeah. So if you're going to getting ready to get a store, you had a really good lease
Mm-hmm.
from Cookies, right?
Mhm.
And you had to show what you were getting ready to make.
Mm-hmm.
Yeah, that's a bank loan.
Okay. That's good to know. That's really good to know.
Yeah.
And then what about brands? L Rock was saying, if you want to start a brand, you better have
4 mil,
5
easy.
million
5 mil.
ready to just fucking blow.
Throw away. Yeah.
Yeah. And for as a brand,
Mm.
I guess you can structure it as a company and show some revenue and show the paper trail, and then maybe come reach out to you. And
That's unsecured,
mm-hmm.
so that's going to be expensive.
That's a business.
Yeah.
Yeah.
1.6
That's
factor.
a 1.6 factor.
Oh, man.
That's how we're just referring to
That's hard.
things.
Hey man, you know what I'm
Wow.
saying? Hey, listen, I gotta tell the truth, man.
Yeah.
That's going to be in my
Respect.
lexicon. If anything's kind of,
Yeah.
I'm going to be like
That's
1.6
that's a-
factor, baby.
Yeah. 1.6.
That's a 1.6,
Yikes.
dog.
Yeah, we can't make this
Yikes.
Hey,
happen.
listen, I'll be like, ooh, that's tough. That's a 1.6, man.
Yeah. Better own some real estate.
That's a tough one, man.
Oh, that's
That's what I tell them, bro. I'm like, ooh, that's
And then-
tough.
But and then we get into real estate, and it's only, you said 1%. What was it? 1.3.
1.2.
1.2.
No, I think
But you can get more money.
Yeah, I just think if it's a less risky deal, if it's unsecured and you're a really strong company, and it could go down to a 1.2 factor, unsecured.
Yeah.
I think it all depends on what you're depositing. I think it has a lot to do with, let's say you're depositing $100,000 a month, let's say roughly. They're probably going to lend you about $100,000. And depending on how strong the company is and all those different type of things, they'll figure out which factor you're going to be on.
Mm-hmm.
Okay.
Interesting. Everybody out there, there's money out there
Get
for
the
you.
money.
Get that money. It's
Get
out
your
there.
shit in order
Deon
and get the
Jones.
money.
Hell yeah.
Thank you.
That's how you do it. You know what I mean?
Yeah, man.
You got to get that money.
No, it's just
Especially
nice
right
to hear
now.
that it's not dead, because I
Yeah.
feel like everybody in this space, if you're stagnant, it feels like it's dying in a sense.
I'm also thinking, okay, as a distribution, we're selling 1,000 pounds a month. The product is selling at 800 a pound. We want to come and get a loan. Is that something that we can use to get money?
I think what it depends on is what you're depositing.
Okay, depositing it into the bank, which is going to be cash, which is tough.
Do you own any real estate?
I mean,
Do you
I
own a commercial building?
I don't. But that's the way to go.
Yeah.
At the end of the day.
I think that's the way to go.
Yeah. Okay.
I think what you really need to do is you need to look for a little building similar to this one
Mm-hmm.
that you own.
Yeah.
And then I think that once you do that, then I think you can leapfrog off the top.
Leverage it.
Yeah. Branch off of that.
Now, the 1.6 factor is the factor of the day. That's
Yeah.
the word of the day, man.
Yeah.
Yeah.
Yeah, there we
Absolutely.
go.
I'm gonna
Something,
use
yeah.
that.
When something's not right in your life, just say, "Oh, Deon, that's
Damn.
a 1.6."
1.6.
Oh, it's just so much information. I love
Yeah, I
learning.
mean,
I
I
have
feel like-
no insight on any of that from my personal. I just deal with
I'm
presenting
surprised.
to accounting.
I'm surprised by how accessible it is.
Mm-hmm.
For some
Yep.
reason, I thought it was a huge gate-kept thing.
That's what they want everybody to believe.
Yeah.
It's very similar to a normal loan.
You have to have the documents.
Yeah. Yep.
A wise guy once told me, he said, all money in this world is made moving papers. He
Yep.
says, if the papers aren't filed the correct way, you don't get paid.
Mm.
But and I thought about it, and every business.
Everything. It's really
Yeah.
everything.
Like you close a real estate commission, if you don't have all those documents in there the right
Yeah.
way, they won't pay you at the end.
That's just like you can break it down to quarterly funding. If you submit your request.
These papers have to be right.
You're not going to get your funding.
Right? These papers have to be filed the right way.
Yeah.
Blah, 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 blah. Right.
But the personal people that actually have the capital that you are basically lending, are they're 100% like involved in the conversation, right? Okay. But are they like being fed like applications and due diligence to
it
see
depends. So there's two different sources. So you have what I call just straight deed of trust investors, where I go out individually and I sell this one deal to this guy, or I'll put a deal together and I'll email it out to 20 guys, and whoever comes back first and says that they want to do it, we go with that guy. So that's one way. Then you have there's a fund actually that's built, and so if you have discretion of that fund, whatever deal that you want to do and you think it's good, you just go do it. And then there's actually people that have lines of credit, and they can lend off those lines of credit.
I was gonna say, what about business credit? Full businesses that all have good credit.
Yes,
you can borrow off that as a hard money too.
you can.
The money's there.
You can lend that.
Okay,
Yeah.
I can lend it.
Yes.
Good to know.
Do you want to get
I'm good.
If any of you would like to become an investor, let me know.
For sure.
I wish I was
Explain-
there.
I'm just telling you.
Let's explain that a little bit more.
If you want to become an investor and make 12 to 13% on your money,
The blade.
you can come in and put your money in the fund, or you can go on my list, on my email list, and when a really good deal is out there, I'll email you.
Okay.
I'll say, hey, look, I got a deal out here. It's in San Francisco. It's a $1.2 million building. They want $600,000 on it. It's paying 12.5%.
Wow.
Do you want in on this deal?
Sign me up.
And these
12%?
and you get at least 13% back on your on
12
what you loan.
I get anywhere between 11 and 13% depending on the deal.
Damn.
And not just on honestly, it's not just cannabis deals, it's everything, honestly.
Yeah.
It's every deal.
I
A
feel
lot
like
of people
it's
are out there moving. A lot of people own this house free and clear and they want to buy this house, right? But they want to make it look like cash. So what I do is I come in and I put both of the houses together and I just get them that house like that in 10 days. And then when they sell this house, they can sell that house and pay it off. It's called bridge financing.
Okay.
That's crazy.
Yeah.
That's something new.
That sounds very complicated.
I've never heard that before.
Yeah.
A lot of paper behind that.
None.
None? Paperwork?
because
None.
it's assets.
No, it's just easy. Boom. 10-day close, man. Easy. It's just
What?
like cash. Just like cash, man. Think about it. You're taking two assets. You're taking $1 million asset
Yep.
and another $2 million asset. That's $3 million worth of asset.
And it's
And you're
property.
lending 1.5 million on it at 50% of that value. That's
Yep.
That's easy.
Easy.
boom. That's done.
That's that imaginary money.
Yeah.
That's that
Transactions.
imaginary
Some of mine, yeah.
money.
I can see your energy when you talk to
Yeah,
me.
when those are the ones,
yeah.
man, because it's like you can go beat an all cash buyer. You can treat your deal like cash just by leveraging this money. And who cares if it's 10, 11, 12%? You got it.
Yeah.
And if you're going to
Nothing.
sell that house anyway, you pay that
It'll
loan
all
back
go
off.
Yeah.
Yeah.
That's some sneaky
Around.
shit.
It's
Yeah,
just
but-
letting that money
Yeah.
float,
Yeah.
essentially.
But if you're the lender at 1.5 or you're in that group, because it doesn't have to be all one person. I can have 3 people at 500 on that loan.
Wow.
Dang.
Okay.
Right? I could have 3 investors, 500, 500, and 500. You guys all want to make 12%?
Yes.
Put them in that deal.
There it is.
Oh, that's cool.
12% is really good, actually.
Yeah.
It's very good.
Yeah.
Yeah. It's a good, I mean, it's,
When I was making even 3%, I was
Yeah,
like,
that's what I
fuck
mean.
yeah. Fuck yeah, I made 3% on that shit.
you got these
know?
guys making 6 and 7%.
And that's
you know?
saying 12% is actually fucking
It
insane.
is great. Yeah. Yeah.
Wow.
If you're one of these guys and you got that cash out there and you're on the lam out there with the 500,000,
Or you got the asset. That's the cash. That's
yeah, or you got that cash out there,
Yep.
come talk to me.
Mm.
We'll turn you into a lender.
That's the real cash. That's
I'll turn you into a lender. Come see me, man. That's what I'm
Damn,
looking for.
Deon.
Every day I'm looking for new investors
I'm
because
bricked.
we have to find these
I
deals.
mean, there's
No, but what I'm saying
out
is
there.
we have to find
Yeah.
money, right, to fund these deals. I have to continue to search every day. That's what I do. I search every day. I'm looking for new investors. That's the game, right?
Yeah. I bet it's fun in a sense too.
yeah.
Well,
I
you
mean,
get
it's
to help
out there.
people.
You're
Networking, you're
educating.
That shit's
talking.
exciting.
I just
man.
want to
I don't
help.
care
You know what
who
it is,
you
man?
are.
If
That
I'm
shit's
helping you,
exciting.
listen, if
Well,
I'm
money's
helping you,
exciting.
I just want to help
And then
you.
when you're educating people, yeah, you're helping.
I just want to help, man.
Yeah.
Yeah, everything else comes along if you help and if you give everybody all the
You
information.
just said that.
Yeah.
So many times You go into a situation with very limited information, and then you make a decision based on limited information.
Lack of information has killed every one of my.
Every one
Every
of us.
deal that has fallen through has been a lack of information
And a lot
on
of the
my
times,
part.
you'll go to a lender and they'll give you a little bit of information.
Yeah.
They'll give you one avenue.
Yep.
I'm not going to do that.
Not all the.
I'm going to give you all those options. I'm going to say, look, there's 4 ways we could do it.
If you know everything, there's no way you can lose. If you know everything, there's no way you can lose.
You got to pick which one is best for you. But
Yeah.
if you only know one,
It's hard to know everything.
It's really hard. It's
So
really
who you
hard.
know.
Yeah.
Well, that's the networking
That knows
and
that
the
thing.
relationship
Exactly.
building
Right.
along the
Yeah.
way.
exactly.
So if you
Gaining
don't
knowledge.
know Deon Jones, now you know. There
Yeah.
he is. Appreciate you being on here. How do
That was
people-
fun,
How do
Deon.
people find you, Deon?
Just call my cell phone, man.
Cool. You got
it,
social
man.
media, email, nothing?
I don't do none of that, man. No, you know what? I'm a highly confidential person.
Okay.
I just want you to know I'm back working on your loan. That's it.
Yeah.
It is.
That's
I don't want to
tight.
be online. I don't
Yeah.
want none of that, man. That's just not my thing. I'm a little old school that way. You can call my cell phone, man. You know what I do? I answer my cell phone. That's it.
Bingo.
They call me
That's huge
and they
these
say
days.
we were told to call,
Right.
and that's it. Yeah, that's.
Solid.
I don't do advertising. I'm not none of that, man.
Hit us up at the One Harvest Podcast. I'll get you his number. Good to go.
There we go.
One love.
Thanks.
Peace.